What up, YouTube? It's your boy Dion back with another video, and I wanted to take a second to just kind of upload a new video. It's part of a series that I'm doing for 2025. The series being record more, be more present on the platform. So if you're watching this, I appreciate it. But what I really wanted to do is just kind of talk a little bit about do prop firms help or do they hurt new traders? Um, do prop firms help or hurt new traders? I got a list, honestly, and I want to go through the list basically, just talk about my experiences and my overall thoughts. Mainly because you might be a new trader and you've heard a little bit about funding accounts, you've heard about trading with prop firms, and this might be a video that's helpful to you to help you decide whether it's the right move or the wrong move for you at this point in time. And at the end, I will share a little bit about my overall thoughts on my list. So obviously, I'm gonna start with the pros. Number one, um, having access to capital for an investor or a trader is like paramount. It's so important. Um, you know, at when I flipped my first house, I had my brother and a good friend of mine who was there to help me out and lend some money because I found the deal, I found the opportunity, but I didn't have all the capital to secure the house and to do the repairs. And so, if it were not for having somebody there available to loan me the money or partner with me on that, I wouldn't have been able to renovate, flip the house, and make the money. So I say all that to say is having access to capital is super important. So being a funded trader, you have access to capital. You got access to money. So essentially, what the way it works is, um, if you are a trader and you are a proven profitable trader, prop firms will give you access to capital um, via a funded account, and you can trade that funded account to make profit, to make trades and make money. Um, and and I think it's really neat because I think for years before, I guess I won't say social media, but the change in the way traders train online. People trade from home now. People trade from their cell phones. And years ago, you know, 15, 20 years ago, that just wasn't possible the way it is today. So funding companies are relatively new in that space. I think funding companies and prop firms have always been around, maybe in and around like the New York Stock Exchange and different brokerages. I've read a book, I think it's called One Good Trade. Um, and the guy who wrote the book ran a prop firm out of New York. And so they've been around for years, but not in the way that you could be at home trading. You could be in Puerto Rico, you can be in Dubai, you can be in Thailand, you can be anywhere in the world taking trades if you're a funded trader. And essentially, what it is you're not risking your own capital. So let's say you have $100,000 funded account, you you have access to use that money to make trades. And so whatever profits you make, typically most prop firms, they will have like a profit split, whether it be a 90-10, meaning you keep 90% of the profit, 10% goes to the prop firm, 80-20, 70-30. Each prop firm has different rules as far as how they do profit splits, and then they have different tiers. So for like a lower tier account, meaning you have access to smaller amounts of money, um, you might have a bigger split, bigger share that you share with the prop firm. For a larger account, where you're trading a large amount of money, let's say, $250,000, $500,000 of prop firm capital, you might be splitting 90% or 10% with the prop firm, and you keep 90. So they have all different types of variances as far as the trading capital, but and maybe I'll talk more about this at a different point in time, but access to capital. I went on a bit of a rant, but access to capital with funding firms is a huge pro versus trying to make money and trade your own live money or in your own brokerage account. Um, Lower cost to learn. That kind of leads me to my second point. It's a lower cost to learn. If you're trading your own live capital, basically the only thing that you're trading is the money that you have in there. If you have, $5,000 and you have a home run trade that you feel like, that this is going to work, and you just send it. You take a $5,000 position, and it just reverses on you. It's just a bad trade all around. You exit the trade and you take a huge loss. Let's say you lose half of your account. So now at $5,000, you're down to $2,500. That significantly um, it ruins your buying power. So now the money that you were using to grow your account and to build your capital, like it's cut in half. And and if you save that money, if you have a 9 to 5 and you're using your savings to fund that money, whatever the case is, it's a lot different when you're trading and losing your own capital versus when you're trading with a prop firm, and essentially you're trading simulated dollars or the prop firm's money. So it's completely different. So learning on a prop firm is a lot better, in my opinion, than learning with live capital. And let's just say, you don't know what you're doing and you blow $5,000-$10,000 really quick. I mean, I've heard those stories. I mean, if you've been on YouTube, you've seen those stories with different traders and folks that didn't know what they were doing. They had a hot tip and somebody gave them a hot tip, and they put all this money into, you've heard a lot of those crypto stories, actually. They put a lot of this money into the markets, and it's poof, gone overnight. And so that could be really costly. And if you're a trader or you're around the trading space, there is a I won't say like a quote, but like a commonly used phrase that 90% of traders lose. Meaning, out of 10 people that open up a brokerage account, 9 out of 10 of those folks are eventually just gonna like quit, from trading. And so I think a big part of that is those folks that aren't necessarily looking to do it for long term, but they get into it because they've seen somebody that does really well. If they heard of a story where somebody turned a little bit into a lot, and they put some money in there, dump it in there, and then it's gone overnight. So it's more expensive to learn with your live account. So trading a prop firm could be better in that way. Not unless you're trading simulated and trading on a simulator where you're not actually trading live money. So that's a good way to learn too. But in regards to trading with a prop firm, trading with their money is a lot better than burning through your own cash. I mean, yeah. Another good thing about the prop firms is, like I was just sharing, that it's a profit split. So let's say you take a trade, you make $1,000 on that trade, and you have an 80-20 profit split. Out of that $1,000 profit, $800 goes to you, $200 goes to the prop firm. Well, if you lose on a trade, the prop firm isn't making any money. So what I find, most prop firms or funding companies, a lot of them have really good training to help teach and train traders, teach them how to properly assess a trade, learn about different setups, different patterns, learn about the markets, a lot of language, because a lot of trading, there's a lot of lingo if you don't know. And it could be kind of intimidating for like a new person if you just coming to, you came to trading because you want an extra source of income. That's why most people do. I don't think anybody does it for, just for shits and giggles. Everybody's looking to, grow and make some extra money. So, it's important. And so having proper training is really good, because with the right training, learning how to trade the right way, and having a prop firm share share some tips and tricks and things that you can utilize so that you can make money, so they can make money. It makes sense. It's actually a really smart business model. So so that's definitely a pro, having that training. And what I will say, you definitely can have training for for I guess trading live or doing simulated or whatever. But on YouTube, there's a lot of scattered thoughts, so it's helpful to have like training that's for me at least the training that I've done over my life. I've done like the 67 steps and some other programs, and like having a guided step-by-step process is much better than just like having a mixed bag of different videos that like have a good thumbnail, so you're clicking on that, and the message and everything that you're learning is coming from a different person, and you're learning like multiple different strategies. So like if you could learn in the beginning and have like a path to follow, you're going to be a lot better off in my opinion. So having those resources with the prop firms and funding companies is definitely a pro. And the last and the biggest thing that I would cover is the risk management. Um, with the funding companies, because you are giving, well, I won't say giving, but you're trading an account that's essentially not your own capital. Um, you are there are rules as far as how you can trade, and the things that you can do with the account. And so there is a lot of rules and regulations when it comes to trading on a funded account. You just can't go full port willy-nilly and just make random trades and think that everything is sweet. That's just not the way it works. So with the funding companies, they have really tight risk management, and with that risk management, you learn on a very, very deep level of how to trade and take trades, enter in and out of positions, and um, how to how to be a good trader, basically. Risk management is one of like the core things when it comes to day trading or swing trading or any type of trading. Being able to cap the downside is a thing that Tim Sykes always talks about. Being able to build your knowledge account. So like if you were just like helter skelter and you're just doing things randomly, like I've done often, it's going to be difficult. So the prop firms, they really enforce risk management so that you're not wasting your time, you're learning the right way, and then you're not wasting the money that you're investing in these prop firms, because they're not free. You have to pay in order to get access to that live capital. Some of them do them on a membership, I've seen, and also some of them you just pay a one-time fee, and as long as you are within the rules of the prop firm, then that account is active and live. I think like if you go dormant, you take like a long period off, like a month or two off without taking any trades, maybe your account will be dissolved or closed. And then if you breach it, meaning if you have a max of $2,000, random number, a maximum of $2,000 that you can lose on on the account. If you breach that, then you lose the account. So those are like the things as far as risk wise, but a lot of them have a lot of different rules. All right, so let's jump over to the cons. I talked about the pros and how awesome it is to actually have access to capital. When it comes to investing, I think that's the biggest thing. They always say it takes money to make money, and the older I get, the truer that is. You can have a good idea, but if you don't have access to capital, I mean, an idea is just an idea. You need to have resources to put behind it in order to to give it life. So one of the cons that I don't love, and that it's kind of shot me in the foot sometimes when I've been trading on these funded accounts or in the evaluations, is they have really tight risk management. Now, I know I just finished saying how good risk management is. Um, the negative side for me, at least, is that it is a fine dance. It's really difficult to find a good balance for me. I know I've seen other YouTubers and other folks that they've gone through these, and other folks on Reddit as well. They've gone through the evaluations like that, got funded, they got payouts like the next month. So everybody's a little bit different, and I realize that. But in terms of me and my situation, having those really tight risk parameters, um, because I've traded live, for several years, um, and then having to relearn essentially how to trade. Um, with more risk and more rules in place, it's been difficult. That's been the biggest hurdle for me because I won't say I consistently make money in my live account, but I'm definitely, at a position where I'm like, um, I would say I win more than I lose in my live account. But with the funded account, I don't know if it's because the rules are so tight and I'm taking too larger positions, um, or I'm just used to having more breathing room in my trades. Meaning, I take a position and I just have a larger area that I think the trade is gonna go in. And with these funded accounts, like there is not a lot of trailing drawdown. There's not a lot of wiggle room. You have to kind of be very sniper-esque. You know what I'm saying? You got to be like in and out. And so that is something that I'm definitely working on when I get back to I actually use Trade the Pool. Um, and Mike and some of the guys over there, I really like Trade the Pool. Like I said, I was talking about different resources. They have really good live training on YouTube and tons of resources. And I really like what they go with, or when I say what they go with, I like how their approach to educating their traders, I guess, is what I really wanted to say. But for me, it's taken an adjustment to master trading, with those tighter risk rules. Um, and the psychology piece for me, another con is the psychology piece. So for some odd reason, I just trade differently with my live account than I do on the funded evaluation. Um, I am much more risky with the funded account, because in my live account I trade under PDT, which means I'm trading less than $25,000 of capital. So I actually have a cash account and I don't have unlimited trades per day. So, there is because of the brokerage that I use, I don't use an offshore brokerage that allows you to trade outside of PDT. I trade with Fidelity and Webull, and with those platforms, they you have to have over $25,000 in your trading account in order to have multiple, day trades. And so I trade under that, and I use a cash account, so that limits me the amount of trades that I can take in a day. Um, and and when I'm trading the funded account, I'm accessing, I've done the $20,000 account that they have. I've done the $160,000 account that they have, and yeah. And so with that, there is no there's no PDT. You can trade as much or as little as you want. And so I've heard and I believe, and part of my trading plan is to limit my day trades, because the way it works is you're limiting your risk. So if you are taking so many trades, you're taking your money and you keep putting it in harm's way. It What I've learned is when I take less trades, what it does for me, it makes me, and this is all the psychology side of it, it makes me um, more selective on the trades that I take. But when I'm trading in the funded account, there is no PDT, so like I'm not as selective, and I'm more reactive when I see movement in the market. And so the psychology side is like I just treat it different versus the live account. I'm much more cavalier, more loosey goosey, throwing money around. You know what I'm saying? And then with my live account, I'm just more responsible with it. Basically, is another way to put it. So the psychology part I'm still working on, and you might be different. You watching this, you might be different. You might say, I'm just a risk adverse person, so I never, in any kind of situation, any world, I'm just gonna be throwing money around, whether it's real or fake. Well, me, I've always been an entrepreneur. I do work a 9 to 5, but I've always been an entrepreneur, and so like I have a high tolerance when it comes to risk. I'm willing to jump out of the airplane and build the parachute on the way down. That has helped me in a lot of situations, being able to just kind of put myself out there and figure it out on the fly. And I can honestly say it's shot me in the foot more times than I can count, because it's more reactive and there's not always a plan behind what I'm working on. So it works to make sure that I'm taking action, but the action isn't always the best system process. It's not always the best most efficient way to go about things. So the psychology side, I'm still working on. But if you got that licked, kudos. It might, trading with the prop firm, that may not be a con for you, but it is definitely for me in my experience. And I touched a little bit about less freedom. It goes back to those risk rules. Um, there's just more rules in place with your live account. You can dump, you know, you can dump 100 grand in there, and by all means, you could make $100,000 in a day, and you can definitely lose $100,000 in a day in the market. So you have more freedom with the prop firms. There's, if you have $160,000 account, you can't just take these huge positions, because they have what they call is basically there is a percentage of your gains that can be like I want to say validated. So you can't just go all in, like poker. You can't just go all in every hand, and the money that you make is all good. Only a percentage of that money that you use is going to be counted towards like money that you can actually withdraw. So it sounds a little off, but it makes sense. It basically incentivizes you to trade more responsibly, rather than just going YOLO or just throwing money out there in the field. Shout out to my craps traders, or my not craps traders. We play craps at the casino. My folks that rock with craps. Um, and Okay. So one of the other cons that I would say is not anything, thankfully, that I've experienced, but in the last year, I want to say 2023 and 2024, if you do any research on YouTube, you can find tons of videos where it was pretty regular, where a lot of Forex firms, futures firms, and a lot of just prop firms, excuse me, in general, were just closing and shutting down. There was some regulation issues, there was some scam issues, and I don't know if that has been totally rooted out of day trading in the prop firm space, but I know that there are still prop firms that are opening and closing like all the time. And so I don't know of all of the different firms that have opened and closed, but I know that that is something that a lot of new traders should be aware of, that if you are going the prop firm route, make sure the firm that you're trading with is reputable, and that they have a track record of paying traders, and that essentially you're protected. The last thing that you want to do is put a lot of time, effort, and energy into passing a prop firm on to get funded and getting a funded account, making that 5, 10, $20,000 withdrawal that you've been waiting on, and they go like poof in the night. That's happened to a lot of different traders, where they've done the work, spent the money for the funded account, finally get funded, and then the company goes belly up. So that would be a horrible experience. I was on Reddit, and I heard a story just like that, and I'm just like, yo, that's part of the risk, that's part of the cons that come along with the prop firm space. And I know that it's getting better and better and better. So just some things to be aware of. So all in all, what I would say, my experience with prop firms, like, I like it. I know that even though I have yet, I hate to say it out loud, but it's true. I've yet to pass a funded challenge after 20 plus failures. I've been close, but it's always me, never anything with the prop firm. But having failed that many prop firms, I would still say I am a better trader going through that, because there was just so many things that I didn't know about trading, risk management, um, that I know now, and that I'm just a better trader because of it. So I would say yes. It's for me. it is a great investment, and I would say they help new traders more than they hurt new traders. So if you're considering it, there are a lot of good prop firms out there. Like I said, I use stocks to trade. Just kidding. I use Trade the Pool. I do have a link. I'll leave that in the in the bio below. But just in terms of overall, I think it's a win. So that's really all I got today. I just wanted to jump on here and record a little bit. Um, I'm in Detroit, so shout out to the Detroit Lions. If you're a football fan, we're balling right now. I hope we can make it all the way to the Super Bowl. This week is a bye week, so if you're a Lions fan, throw a little lion in the comments below. Make sure you like and subscribe, and I appreciate you tuning in. That's it for me. Peace.